Today's episode of Market Talk is brought to you in part by Growmark FS. Keeping up with the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And a good afternoon. Welcome into Market Talk for this Monday, October 4th. Great to have you with us. Thanks for making us part of your day. I'm your host, Jesse Allen. Find us online, markettalkag.com. That is our home on the web. Markettalkag.com is where you can find us. All of our social media, all of our streaming sources, anywhere you can listen to and download podcasts, you can find Market Talk there. Find us again online. All the links, markettalkag.com. When we come into the first full week of October, fairly nondescript day today. Quarter wheat mixed, soybeans, a little more follow-through pressure there. Cattle had a really strong day today. Hogs, not so much. We're going to talk about all of it as we are bringing in our guest with us today. He is with Professional Ag Marketing. Mike Miner joins us here on Market Talk. Mike, great to have you back on the show, sir.
Great to be back.
Appreciate you making some time to join us here today. And, as I kind of mentioned there in the open, a fairly nondescript day today in this grain market. Why don't we just start there? Give us just a few of your initial thoughts here after the close. Quarter wheat mix today, beans under a little pressure. Anything stand out to you in Monday's trade?
Yeah, something that's really stood out to me in the early weeks trade here was the resilience to trade higher on these grains. Now, after last Thursday's report, we saw some bearish numbers on the corn side of things. Not overly bearish, but they weren't necessarily positive by any means. Corn quarterly stocks there in that report pegged at about 1.23 billion bushels versus their average trade estimate of about 1.15 billion bushels, and just had lower corn disappearance and really the resilience of it to trade back up towards that 100-day moving average, up towards, close the day at 540 on the December, really getting towards that top end of the trading range again. I thought that was encouraging. Obviously, we've got some help from situations regarding the energy market today. Crude oil getting up towards $80 on that WTI, something a lot of people are looking forward to. A lot of outside influence in that marketplace right now. That'll be interesting going forward as we've seen ethanol margins skyrocket in light of that. So I'm watching that quite religiously right now, see how we're going to act at the top end of this trading range. We all remember what happened last year when we got towards fall here and found some strength. So are we going to top out again, kind of like what we've been seeing towards the top end of this trading range? Or are we going to try to continue to support this market?
Well, you mentioned how corn, that 540 3/4 mark on December. And, if we look at the market, I'm with you. I'm really impressed with this corn market, how it's held in there. We pretty much been around this 550 mark for months.
Yeah.
$6 was a couple days, 550 has been months. And, I think that is very telling with this corn market, just the strength that is underlying. A lot of folks were worried that we would push back down around $5, 485, but we're holding in here really, really nicely the last few months, Mike.
Yeah, for sure. I will try to see if we can go down and fill that gap that still lingers from last April back at about that 477 to 480. So if we do start to slide down, that'll be one of my next targets, especially if we break through that $5 resist or support area. So that's something I'm still looking for. Have been patient on that. But otherwise than that, I mean, wheat, I think, has had a great impact on corn as well. In its report, wheat was really the true talking point, I think, out of that, as we had quarterly stocks at about 1.78 billion bushels versus their 1.85 expected. In the report, I mean, their production was also down at 1.6 billion versus 1.69 was the expected, or 1.68. So they had a really nice report. They've had really nice strength even before that as well. So I think that's lent some support over to the corn market as well at this time frame.
And looking at wheat as well, just continuing on that topic, I've kind of seen that as well, that wheat is really kind of giving us support. And some people have thought that maybe the wheat market's taken the lead a little bit here in the grains. KC wheat today was down a little bit. I wonder if some of that rain over the weekend in the southern plains maybe contributed to some pressure there, Mike.
Yeah, I could see that because the US Midwest and Northern Plains have been dry, and they've looked at this La Nina pattern that could continue to see some dryness through here. So just feed it some rains in the time being, but long term, it still seems pretty supportive.
Very true. All right, let's talk soybeans and kind
Yeah.
of look back at the stocks report and the ending stocks there. Soybeans again today under pressure. There was a little bit this morning at the open where we tried to trade above unchanged, and then we lost it. And I know there's a
Yeah.
lot of things out there, better than expected yields, China issues, China not showing up in the daily export wire, and then of course just that very bearish stocks report last Thursday. What's your take of this soybean market right now as it stands with all of these negative, bearish influences on the market?
Yeah, so obviously the report for one quarterly stocks came in at 256 million bushels versus 174 expected. So a pretty bearish report there for them. Production was actually pegged up a little higher for last year at 4.21 billion versus the 4.13 expected. The report was just not very friendly on the soybean side of things. And going forward, I mean, you got to watch Brazil. I think that's going to shift a lot of weight over to them as their forecasts are turning a little bit more favorable for moisture in the Brazil soybean production areas as they're just ramping up their planning efforts here currently. So that'll be something to watch really strong going forward. Um, we're like 30% harvested as of today. We'll see what the numbers are suggesting later this afternoon, but yield trends are a little bit higher as well. So we've just got a lot of negatives going against the soybean market. Wanted to see China show up, and we're just not seeing it. Slow start to our exports. And I mean, then you finish things off with long term macro fundamentals, and you've got a US dollar that wants to run higher. And we've got a lot of things going against us. And the hurricanes have led to slower export markets to start off with, and that might shrink up our export window, especially if Brazil has a quick planting season get through, and then it grows pretty quick there. And if they've got a cheaper dollar, their prices could look pretty affordable to people like China. So they could get after it and see some exports as early as January, even some coming out in December. So that's something to keep an eye on as our export window gets shortened there. So a lot of weight on this next crop that's coming out of the field.
Well, I wonder as well, Mike. There's a lot of talk out there about fertilizer prices and the skyrocketing there, and how we could maybe plant more corn versus more soybeans versus
Yep.
corn next year because of that. And I wonder if some of that rhetoric might be influencing the markets as well here a little bit, or could the next few weeks ahead.
I think it could. The overall impacts, I think, are still going to be heavily weighted on yield data and exports going forward. I think that's in the back of their mind, though, rotating. A lot of the projections are still pretty close. Like on our personal farm, we ran some numbers, and on the corn side of things, I mean, it still was pretty competitive with the soybeans. So even to go corn on corn. So it's hand in hand right there, but the soybeans are getting beat up pretty bad right now. And I think that's got a little bit of something to do with it, and will definitely get looked at going forward. That'll be a long winter.
One positive, maybe in soybeans and the soy complex, if you have one, Mike. For me, I was encouraged with bean oil holding in there today. Talk about what maybe you see as a positive. Is it soybean oil or something else?
Yeah, one bull is definitely that the December palm oil and China's January soy oil prices, they hit contract highs last week there at the end of the week. So that's lent some support to the December soybean oil there. That's going to keep demand pretty good for soybeans here in the US, and the processors competitive. But even the exporters at this point have decently competitive bids compared to the processors. So you usually don't see that, especially in this area around Southwest Minnesota or into South Dakota. So that'll be interesting to watch going forward as well with their competitiveness. But that's about one of the only bulls I can find in the soybean market, besides the fact that we got killed here recently, and we could look for a little rebound coming up.
Mike, let's flip over to livestock, and it was almost a role reversal from last week here to get this week started. Cattle futures under some good strength here today. Triple digit gains in live and feeder cattle, and you just look at this cattle complex. It uncovered some aggressive buying interest, and one has to wonder, where is that coming from to start the week? Any thoughts there?
Yeah, so cash obviously hanging in there still at their fake numbers, if you would want to call it. So that'll be something to try to keep an eye on, but it just really isn't changing a whole lot. It's been discouraging. We had a hard sell off for a long time there. So some of these buyers just kind of getting back into the marketplace. So I would like to see a little rebound here, get the funds back into it, and just see some money flow back into it. Third quarter, we did see some impressive slaughter numbers, though. So long term fundamentals are still going to try to go in our favor. Box beef values have still held in all right. I mean, for the time of the year that we are in, should continue to see some seasonal support here. So it'll be nice if we can get a few more days like this, get back to some more middle ground, anyways, and get some funds back behind these cattle again.
Well, and some folks even are wondering too. We had that rather bearish cattle on feed report recently, but maybe the market already priced some of that in, and maybe that's a
Yeah.
that's a case of seeing that here, Mike.
I'm hoping so. Anyways, that we got a lot of fundamentals out in the question marks here for this cattle industry going forward, and seeing what kind of leverage the producers can get back, because we just don't have much of it at this point. It's pretty much a charity bid.
Let's look at Hogs. As I mentioned, kind of a role reversal from last week. Hogs had a great week, and now coming in here today, maybe triple digit losses, maybe taking some profit. Hogs cash just hasn't been following the strength of futures here lately, and that just seems like that's going to be an anchor on this hog market, possibly.
Yeah, we're trying to figure out where that index is going to fall at, and I think October futures is trying to do that at this point here, as we just got a little bit of time left on that to figure that out. But we put in some pretty big gaps here on this chart last week with our skyrocket up after the nice hogs and pigs report, and it's still a few question marks behind that report, and we'll see what those start to come out like in the near future as well. But for the most part, it was a really nice bullish report, and the funds have treated it well. Got some good support under it, but we left some pretty major gaps, and got back to some old trading levels here, kind of towards those old humps we had towards the top end of the range. Getting a little bit of resistance there in today's trade, first day that we're closing lower here in quite a while. So I want to see what we act like up at these levels, but those gaps probably got some guys concerned.
That's something we'll be watching closely, see if we go and fill those gaps, all of them, or what happens. Mike, anything on the outside markets, energies wise? I know you alluded to crude oil earlier on and how that's getting up around $80 a barrel. Any thoughts there? Any thoughts with the dollar as well? It's like you mentioned earlier, wanting to just push higher. Any thoughts outside macro market wise?
Yeah, so last week's higher interest rates and higher dollar, they've been definitely bearish on commodity prices in general. And then, the commodity index is weighted so heavily behind energies, and the strength and support that we've had in the energy markets here as of late have been fantastic. So that's leading a lot of funds back into the energy space, back into commodities. We've had some shakiness in the equities in general here, with mainly problems in China, right? That too is slowing global economy. It's got a lot of guys shaking their heads and just wondering where this next setback is going to fall to. 4.8% down in September for the S&P. Usually you have like 3-5% setbacks in the S&P market in one year. This will be the first that we've had. 10% usually. We haven't had that yet. And then every 3.5 years, you usually get a 20% setback. And we did have that from COVID. So a lot of instability here, and trying to figure out where this next setback is going to kind of fall to for guys to look as buying opportunities. But in the meantime, the slowing global economy has some guys worried on the energy side of things still, and that's maybe why we're not running absolutely crazy today in that sector. I mean, we've got some really interesting articles coming out about the current situation in China and their energy logistics and how tough it is. You know, coal doubling in price. The real bottleneck is the rail cars. So that's a story I want to follow really closely going forward. I don't know how much I'm going to be able to do about it, but it's just something interesting to follow right now, I guess.
Well, you guys have a lot of great resources. You can help out farmers with their marketing plans. And I know it's a busy time of year, Mike, with combines rolling. But if producers need some advice, they want to reach out to you and the team there at Professional Ag Marketing, what's the best way to do that?
Yeah, give us a call at our number at 507-449-2030, or shoot me an email at mikem at professionalagmarketing.com, or go to our website at professionalagmarketing.com. And I'd love to chat with you, even if you're in the combine or something. Got some time to kill, give me a call and we can chat about the markets and what makes sense for you and your business.
Mike, I appreciate you jumping in here today. Thanks for joining us on Market Talk, and we'll talk again soon.
Thank you.
Mike Miner with Professional Ag Marketing, our guest today on Market Talk for this Monday, October 4th. Find us online, markettalkag.com. I'm your host, Jesse Allen, wishing you a great afternoon.